see, we touched on layer 2, and we won't spend too much time on that. So we want to get a quick look at NFT in a minute. But Ethereum's layer 2 ecosystem is growing. So this was one of there's a few of these charts. I'm not always a fan of these because people miss out things and all but it just is designed to show how many different players there are now in this sort of infrastructure and, layer 2 scaling space. And there's a lot. We've talked about Polygon. You've talked about them a fair bit over time. They've been a great trade for sure. I mean, they've got a lot of usage. But in here, you've got a lot now of these full ZK rollup based scaling solutions. Now, in essence, all this is going to mean for a user is that you can transact on a layer 2 with almost no gas fee, near instant. So if you, for example, want to pay for something, then people talk about Bitcoin and Lightning and this and that. Well, very shortly, you're going to be able to pay very easily from a wallet just by simply probably scanning a barcode, just like I do every day here in China, where we've got, digital payments for almost everything. You just scan with a simple wallet application and it pays for something. Now you could be paying in USDC, you could be paying in whatever, but that transaction is going to take place on layer 2, not layer 1. So there is no gas fee with it. And it opens up this whole new world, because even things like, derivatives exchanges, things that have got huge amounts of transaction volume, all real time, can take place on these layer 2s. And perhaps the big difference with a layer 2 to trying to scale layer 1 is some of these have genuinely massive transaction throughput. And the cleverness that goes on in these ZK rollups is that you can put this mathematical proof onto the layer 1 and have full security inherited from the layer 1 that says, I know the state of the layer 2, so I know the balances, I know what's happening on layer 2 every so often. So you've still got full security despite all that extra speed. But what you haven't done is bloated the layer 1. So you haven't created this huge transaction throughput layer 1 like some of the other chains have, which brings you, I've talked about it before to some degree, there is no free lunch in scaling. As soon as you turn all this stuff up on layer 1, as some people like to talk about, remember Elon Musk asking questions about this, because it is the right question, but there is no simple answer to it. If you turn the transaction throughput right up on layer 1, you end up with a big fat node to start with, so loads of compute, loads of RAM, loads of storage, so it then starts centralizing immediately, because a lot of the players cannot afford to run a node at this point, or don't have the appetite to. And then you get all sorts of other issues to do with how do you resync a node when you've got so much data to pull suddenly off the network. Now you've probably got to put this thing in a data center with a great big wire in the back. It just, there's so many other issues there that I think there's a lot going for this layer 2 design that I think isn't properly understood yet, and certainly isn't priced in yet when you look at the reality of scaling. I think when this lands, this is really this quarter probably, we're going to start seeing some explosive growth in layer 2 usage as these wallets come online and users realize that this is really easy. Actually, I just use the same wallet I was using before, and I just press a button and I can now not have to pay any gas when I'm using Uniswap. I think this is going to be huge for Ethereum. It's just going to make such a massive difference. And I think it's going to allow this next wave of users that are coming in these bull markets, because that's what happens. You get explosions in usage when all the headlines are out there. People come to have a look what's going on. I think it's going to support that explosion, within Ethereum. And it'll be good for the space, because once these technologies are proven, and if you look in this box, there's a whole raft of different ideas in here, different flavors of this scaling. We're going to actually see a little bit of a marketplace play out in front of us to see which technologies get adoption, which flavors of this scaling actually work best for all these different scenarios. And that's going to feed back into the rest of crypto as well, because everyone's going to be looking at this to say, okay, that works best. And if you've got a smart contracts platform, you can see then, okay, this is one way I can do scaling that's now proven. So, I don't want to spend forever in here, but I'm the more I read this, I do spend a lot of time listening and reading, still do on this, the more I like this approach to it, albeit, you can accept at the moment it's perhaps a little messy from a user's perspective right now, with having to find how you get in and out of all these layer twos and which apps are live and which ones are not, and this and that. So as it tidies up, I see this being huge. And it actually brings into question the whole layer one sharding piece, which perhaps for another day, but I remember Vitalik saying, I think it was Vitalik or one of the other developers said something similar on one of the podcasts I was reading, as to, I'm not sure we'll be in such a rush to do sharding when we get the scaling in place. We'll just have to see, I guess, how much demand there still is on layer one. And that's because the ratio of what sharding can do is very different to what some of these layer twos are already showing they can do, in terms of how many times more transactions they can push through safely. And they're multiple, they're almost like shards in themselves at that point. So
do that layer two as well. So there's going to be a lot of basically new value coming to layer two, is from what I can see.
Yeah, so we can see, there's a headline here, Arbitrum got some funding, Starkware's just processed 10 million transactions, etc., etc. This is almost every day. My Twitter's full of some more announcements on layer two solutions, because there's so many of them now, and they're getting traction. But yeah, it's whether it takes the pressure off, or more likely, I think at the moment, it starts absorbing all this extra traffic. If we just look at how much transaction throughput there is, say, on Binance, completely centralized, ETH clone, it just shows there's so much demand out there for using some of these sort of technologies for swapping and such like. But I still think there's value in things staying in one ecosystem. We've seen some bridges hacked. We've seen some other things again going on. Bridging for me is a security mare. If you were trying to secure, it was like the worst thing you can try and do from a security perspective is bridge loads of blockchains together and have all the code running in your system with it, all those entry points. Sort of almost like the centralized exchange nightmare. So I think there's value in this in so many ways. So, again, as I've said before, the market's going to decide, but I'm bullish with this, particularly bullish. And we will see. We talk about NFTs. We will see NFTs start to come on these layer twos. Obviously, there's some on Polygon, particularly relating to Ethereum, but I think we're going to see a move so that the primary space for some of these NFTs switches to a layer two. We'll see over time how this plays out. So just obviously looking at OpenSea as perhaps the leading NFT marketplace, you can see this graph. It's crazy. It's sort of, we were talking about NFTs, I think, back here in Telegram days, in looking at it in CTM, and then it sort of bumbled along here, and we had punks and we had this and that, and we thought, okay, probably missed that, and then boom, it's just gone absolutely mad, and it's up way off the top of here now. And it's in essence, for people who don't really get it, it's just collectibles. So it's whether it's football player stickers or whatever, anything that's rare that there's demand for, that somebody wants, whether it's an antique, an old car, or whatever. There's value in it. And we're seeing that here. We're just seeing it play out. You've got huge demand suddenly, not a lot of supply, and hence prices going crazy. And they're simply collectibles. Now, where does this go over time? As you said, I don't think it's just JPEGs. I've got a news item here we can look at, but I think this will morph into the proof of ownership for physical things, real things, houses being obvious, real estate being a very obvious place. The size of the transactions, for example. I don't think gas is going to be a problem when it comes to exchanging your house for your neighbor. It's all about security and sort of proof. You're selling your property, and it goes through, and you've got this digital proof of ownership. You've got a very significant use case there, and I can see a whole world out there of sort of almost like legal services right now, and all this proof that goes on. All these things are often filed on pieces of paper in some sort of government facility to to prove who owns what, stamped by a court or something and put away somewhere, can be digitized. And this space is potentially huge for that. And you can see that perhaps the mix of some things doesn't matter if you're on layer 1, some things are inherently better layer 2. And as you say, I think with the wallets and the platform, if the button says send to OpenSea, you're not really going to care too much, in the end. If you're already in the layer 2 world, you've got layer 2 bridges and it just happens and it's not costing anything. So, huge change coming. We talked about Loopring. There was their announcements of NFTs on layer 2. I have to say I haven't looked at it too closely. Clearly, you're going to be able to mint things and do all the things you do with NFTs on Loopring. So well done to them, and just hope they get some volume. We're seeing NFTs on some of the other chains outside of Ethereum. It's great if you want a $1 NFT, but the action's sat in places like OpenSea mostly at the moment in terms of big value. Hundreds of ETH. This thing's selling for 1,500 ETH on some of these things. It's just like
it's crazy.
Bought for 1 ETH. Half an ETH or something, So
I think the lesson learned here is that if you see a trend in crypto and you think you might have missed it because it goes up 3x or 5x in price and things start to move, you're probably really, really early because it's about to 100x or 1,000x. That's probably
you get used to trading stocks and they go up 10x and they come down and you've missed it. That's not crypto, unfortunately.
Yeah, right. Exactly.
And it was, to be fair, some people I follow in the Ethereum space had called it when the punks came along. Probably should have bought a few of those. When you look back, that would have been that. But it's another, as a fairly new trader and investor, that's the lessons you see as you start to work out, as Jordan puts it in CTM, who's right. So start listening to the people who were right, who was calling the trend. Okay. So I'm thinking, okay, well, you called some trend there. I'll be keeping an eye on your Twitter feed in the future if some other thing's coming along, because, it's probably worth dabbling a little chunk of your portfolio somewhere near that. So I bookmarked this just quickly in the NFT space is interesting, which is to do with a prediction of a massive more users. Is GameStop looking at an NFT development? So platform here, collectibles, etc., in-game, etc. I sort of highlighted this particular part of this big old thread that describes what's going on, just because I actually have come across some of these people. They're proper serious Ethereum sort of developers who've built, Matthew Feinstein was I think was involved in Loopring, etc. So they're taking that seriously and look like they're going to be launching something pretty major to do with, all the in-game players, etc. I think we're going to start seeing some of this stuff become almost like cross-game, if you call it that. It becomes a marketplace that's not, at the moment, a lot of things are tied into one particular game or one particular family of games, if you like. You're going to be able to buy and sell things and transfer things across this ecosystem, almost like in the real world. That's, again, potentially a huge space because, online gaming is huge. So very interesting, interesting development. And obviously an interesting company to be involved in that, because obviously they got tangled up in all kinds of stock involved in the shenanigans that were going on in the traditional finance world.
Base layer, if you can stay on a single solid base layer, not have to break up that ledger. But
there's a Bitcoin argument, isn't there, in there that you keep it simple, you keep it solid, and you don't make it overly complex. And you can put layers in place to deliver these things. You don't have to do everything in the layer 1. And as you say, I've seen that argument almost like as a sales pitch, and it always sort of makes me laugh reading Michael Saylor's things because, great guy for crypto in terms of he's plugging crypto all day long. But he sells enterprise solutions to people, and I can tell when I read some of his stuff because it's sort of, I was like laugh out loud when I read it, because it's just like, man, are you overplaying the benefit of that thing there? Just classic enterprise sales sell, which you probably get all day long in your professional career as I've had a long time. You read these leaflets and sort of put them in the shredder. It's just like, what's that? You can cut through the hype. And I think there's quite a lot of that goes on in crypto where people are really selling stock rather than selling any great technology. And if you're a trader, and I've said this all the way through, whatever it is, whether you believe in all these other chains from Cardano to right back in EOS and all these other things we saw in these past cycles, whether you believe in these or not, you can trade them as a trader because the hype in crypto is amazing. It'll pump from 0.01 to $3. Well, retire, trade it. Don't hide away because technically it drives you mad because you think that's all hype. Trade it. I would just say to people, don't try and justify your trade off a bunch of fundamentals that don't make any sense, because that's not going to get you anywhere. Just trade these things when they're pre-revenue and they're new for what they are. Don't get caught up in them. Don't be a bag holder when it does come down 90% because it hasn't delivered something.
And that's it. And that's